Did you know that many people overpay for their mortgages simply because they don't understand the benefits of working with a broker?
Good. What is the difference between a mortgage broker and other types of lenders?
That's a great question. So there's brokers like me. I'm a wholesale mortgage broker. So the client never makes the payment to me. We do not service loans. And then the next step is the mortgage bank. Sometimes they'll service loans. Most of the time they don't. They just assign the servicing somewhere else. As a broker, we have more options available to our clients compared to like a mortgage bank. They can broker too, but it's not nearly the level that we can do. And then if they do broker, the terms are usually worse and the branch makes less money. So there's an incentive not to do it on their end. And then, of course, there's like big banks, and they have a hard time competing these days with the small guys like a mortgage broker. It's a great little advantage to have for sure.
Absolutely. And since you're a broker, how many different companies do you work with?
Currently, we have about 8, but I could get approved. I could easily get 50 if I wanted to, but the problem would just be learning everybody's systems, and compliance is so important to us that I would never choose to do that. But if I have like 5 good, solid lenders that we can choose, you can usually hit the mark for most people, depending on their situation, depending on how fast we need to go. All those different variables come into play. Credit scores, debt ratios, all those things. We can usually find a great home for people.
Excellent, excellent. So I've been in the real estate business for probably about 15 years or so, and there's always some common misunderstandings throughout the real estate process, including the mortgage process. Are there any regular misunderstandings or just misconceptions that you run into on a regular basis?
Like my competitors, since we don't service loans here, if our competitors, like a mortgage bank or a bank, would say it's a disadvantage to work with me because we don't underwrite the loan here on site. We process the loans here, but we don't underwrite the loan. To me, I think that is a competitive advantage. Like if I have a purchase and sale agreement today and everything from the client, I could submit it right now and probably have it out of underwriting within like 2 or 3 hours. Whereas it's fast. And then as opposed to some of those other types of companies, they have like a setup desk, and then it has to go through. You may not get underwritten for 2 or 3 days sometimes, or longer, depending on the lender. So that's a big misconception. We have a saying here that time kills deals. So the faster we go, better it is for everybody. The faster we can close, we can just give people the opportunity to close early if they want to. If we close faster, the less days we need to lock the interest rate, the better the pricing is typically. So everything is built for speed, but we go as fast as people want to go. But we like to go fast.
Absolutely. That's great. And are there any additional fees when working with a mortgage broker?
No, we don't charge. Some, I'm sure some do. We personally don't charge any third party, fees. We don't charge our own individual processing. A lot of people do. A lot of people charge like locking fees. They'll charge application fees. We don't do any of that. So it is what it is. We get paid by the lender 99% of the time.
Okay, yeah, that was my next question. I think you just answered is, so if you don't have any cost that you're charging the buyer, the consumer, um, obviously people would want to know, well, then how do you get paid? And
Great
so,
question. Great question. We do it all for free because we love it so much. I love helping people, but yeah, so we get paid by the lender. So what they do is, we have wholesale relationships with these lenders, and then since we're giving them the loan, they're not doing anything to get the loan. They're going to make a lot of interest on it over this, servicing the mortgage. So they pay us essentially for bringing the loan to them, and it's actually more beneficial to the clients because we're actually less expensive to work with than compared to like a bank or a mortgage bank. It's pretty substantial, actually.
well, just kind of staying on the topic of cost on the real estate side, I always try to let our buyers know how much money out of pocket they may need in order to get through the purchase process. And on the real estate side, there's the earnest money, which they generally have to have out of pocket, and then inspections that they would have to pay the inspector directly. Are there any out of pocket or upfront costs that a buyer would need with a mortgage?
It's a great question. So just the cost of the credit report typically, well, the credit reports are good for 120 days. For a married couple, it's like $80. If people aren't quite ready to start with a real credit report, we could start with a soft credit inquiry instead of a hard one. But that would be typically a fee that's paid up front. And then when we get to the point of ordering the appraisal, unless it's a VA loan, uh, the appraisal will send out an email, and then the borrowers have to execute the payment before they assign it to an appraiser. But those are the only fees that potentially get paid up front. If it's a VA loan, we just cover the cost up front for the veterans, and then it gets paid at closing.
Excellent, excellent. So you brought up a couple points. One that I want to go to is the credit reports. You had mentioned something about a soft credit pool or a hard credit pool.
Mhm.
I think most of the buyers out there may not necessarily know what that is or why you're doing one over the other. Can you touch on that a little bit?
Yeah. So a soft credit pull is less expensive. Sometimes it doesn't show everything that a real credit report pulls, hard credit pull would show. But it doesn't. A soft credit pull doesn't allow us to underwrite the loan. We'd actually have to have a real, hard credit pull to underwrite the file. So if someone is just kind of kicking tires, wants to know, what their debt ratios are, how much they can afford, sometimes we'll just start with a soft credit pull, and we'll kind of pre-qualify them, and then based on the payments that we talk about, based on how much money they need at closing, all those kinds of things, the purchase price, if that all sounds good, then oftentimes we'll just immediately jump into a hard credit pull, so I can underwrite the file and then get a pre-approval out, that same day.
Good. So in every answer that you're giving, you're mentioning something different that just makes my light bulbs go off.
Trying to keep it interesting for you. Yeah.
Yes, yes. So it brings additional questions. You mentioned something about pre-qualified,
Mhm.
and there's this one other term that goes around, which I don't think very many people hear about as much, but they probably should, is pre-underwritten.
Mhm.
Can you give us some background on those three things and if one is better than another?
That was a great question. So, like if you and I were just chatting right now, and we're just talking about how much you make and how much your debts are, kind of a purchase price, just getting kind of an idea. That's like a pre-qualification. It's just what can I afford potentially, without looking at anyone's credit scores, looking at anyone's credit report or anything like that. So that'd just be kind of pre-qualifying, just like if you and I met on the street and we're just chatting about, hey, I thought about buying a house. Great. Tell me about yourself. It's kind of pre-qualification is about that.
There's also this term that goes around. It's called pre-approval.
It's a great time to just get to know people, get them to know me. And then there's the next step is pre-approval. So pre-approval is when you have people's financials. We have an actual real hard credit pull. And then we run it through the automated underwriting system. There's a couple big ones in the United States. One is Fannie Mae, one's Freddie Mac. We run it through both of them actually to see if one is more favorable than the other. Some of them might require an appraisal, some might not require an appraisal, depending on the situation. So they're a little different sometimes. So that's pre-approved, and then fully underwritten would be, if I was really questioning someone's income, or there was, they had like variable income and I wasn't sure how the underwriter was going to interpret that, then we would submit it to an underwriter, like an actual human underwriter, to, look at each pay stub, look at each W-2, and then issue a pre-approval, like a full pre-approval that's been underwritten.
Excellent, excellent. So going back to, we were talking about cost a little bit earlier. Closing cost is something that every buyer is going to have, but I think very few buyers know what all is involved in closing costs.
Mhm.
And maybe you don't have to touch on everything, but can you kind of run down, what consists of closing costs?